It's an event-heavy week. We have, the voting for the fourth phase of Lok Sabha elections today. 96 seats across 10 states and UTs go to vote. India's CPI print for the month of April also comes out. US CPI is on Monday, and not to forget the fourth quarter earnings season. 200 companies will report their earnings this week, including the likes of Inox India, Varun Beverages, Zomato, Bharti Airtel, to name a few. What are you focusing on this week in this event-heavy week, sir?
Well, lots to look at, Suyash, this week. Thank you for having me on the show and morning to all of you. I guess election is going to be on top of the priority of all these events which are lined up this week. And even, the election is going to be in the spotlight for this entire month and first 3 days of June. My sense is that, and we discussed the markets even last week and the week before. And what we have advised short-term, medium-term investor is to try and take the money off the table in case if you are getting whatever positions you build up in a short to medium term. If you don't want to face the uncertainty that the market is throwing at us since the beginning of this month and a little bit before that, then just stay out of the market for the rest of the month. Come back on 5th of June. Maybe and on 5th of June, you might be able to buy the markets at a little bit elevated level, depending upon what the election result has to tell us. Earning season unfolding. Thankfully, there is no dark spots or red flags over there, more or less in line. And the global news flow, as far as Middle East situation is concerned, is a little bit quiet. Thank God for that. Other data points that you mentioned will possibly, have an impact on the market depending upon which side the data points are. But more so, I think the news flow on the election, and more importantly, Suyash, last week we did see a lot of unsolicited, universal universities of WhatsApp, X, Y, Z, Twitter, the kind of rumors that were doing the round had actually spooked the market. Then we saw a pullback on Friday, and again we saw a let off this morning. So my sense is that this is going to be even much more higher in terms of volatility as we go closer to the FNO monthly expiry, as we go closer to the 1st of Jan, then exit polls, and then eventually the result of the election. So if you don't want this unpleasantness and if you don't want to damage your capital, sometimes it is always advisable and wisdom prevails if you don't do anything in the markets for the next about 25 odd days.
Gaurang, you make it sound like, the market could perhaps, witness some more correction from here on because, give or take, Nifty has corrected by 900 points in this correction. I mean, the old market adage has clearly worked, sell in May and go away. But do you expect the market to correct further as we get closer to the election results?
So, Suyash, we did mention, right? Like I mentioned, last week Monday, we were on this very show. Even the Monday before that is a fortnight back. So what we've been saying is right from those times when we saw those levels of 22,796, which is supposed to be the all-time high on the Nifty spot, which we saw a week before Friday, that was 2 weeks back. So since the market has corrected so much, Suyash, maybe the downward move can be expected to be a little bit limited. But my worry is VIX at 20 plus. Now, this is something that one needs to have in mind absolutely clearly. And unless and until you see this VIX settling down to sub 15, closer to 12, your markets are not going to get stabilized. And any pullback will be witnessed with selling pressure. And that pressure after a pullback in terms of selling would be much, much severe. So, volatility in the sense that from current levels, your downside is protected. But once the market recover, intraday volatility or overnight volatility is something that you need to watch out for.
All right, and so you rightly pointed out, I mean, the volatility is high in the market. Look at India VIX, I mean, we have witnessed a 100% jump over there from 52-week low of about 9 to 10 levels. India VIX is actually above 21 levels, and we have not witnessed these levels in nearly almost 2 years actually. October of 2022 was when India VIX was above 21 levels, so perhaps some caution would be advisable in this market. But again, I mean, at a time like this when the markets are falling, you know, the investors would try to find some pockets of opportunity. Anything that is looking attractive to you, because you know, just a couple of weeks ago we were talking about a little, you know, the valuation discomfort. Anything in this correction that is looking attractive, sir?
Oh, I love the bears because they are the ones who give me the investment opportunities, Suyash. So, and you know, if you are, and what I was referring to earlier is stay away from the market is purely to all those short to medium term investors. And history witness, Suyash, you know, there are many instances where short term traders, medium term traders become investor because they are not in the habit of booking their losses. So compulsion investor is something that you should avoid, you know, if you want to be. So yes, for an investor, I think this is a great market. Sectorally speaking, banking, both private, public, strong NBFCs, autos, cement, hospitality, and FMCG. These would be the priority top five odd sectors, starting with the large cap in these five sectors, and then possibly pushing yourself down to selective mid cap. Small cap is absolutely no unless you know what you're doing. Please stay away from it. Don't put all your money at one time. Be a staggered, disciplined investor. Markets will give you plenty of opportunities for the next 20, 25 odd days, Suyash. And that will give you good portfolio building exercises. So I am extremely, and including defense, power, infrastructure. So altogether, you have 7 to 8 sectors. Uh, Try to understand before parking your money into these sectors when you decide to pick a particular company, and then you know gradually, slowly increase your investments. So this is the way to do this particular market. I will
Right.
once again repeat: if you are a trader, short to medium term, try to take money off the table and go for a vacation. Like you said, you know, sell in May and go away. Though I am of a different opinion because I just mentioned that I love the markets when they come down because the markets give me stocks, investment stocks at a discount.
Any expectations from Zomato this time around? Again, the stock has been a multi-bagger. It's just the only player in this space. We are hearing rumors of perhaps Swiggy coming into play as well. But what's the call on Zomato? And a stock that could potentially, you know, go another 50-20% from here on, or is the upside after that tremendous run capped?
So standard disclosure, Suyash, we had a subscribe recommendation for the IPO of Zomato couple of years back. I think it was at about 76 odd rupees. Correct me if I'm wrong, if my memory serves me right. After the listing, stock went up to I think about 140, 150 odd levels, and then there was a downfall because of the disappointment on earnings and downward downgrading of the stock. Stock slipped below the IPO price, if I'm not mistaken. At that time, when it slipped below the IPO price, around about 50 odd rupees, we came out with a fundamental buy report, which we are currently maintaining a buy report on Zomato. That's the standard disclosure. What I would want to look forward is okay, you know, these orders. I am in as a disclosure again. I am a gold member of Zomato, so my contribution to the bottom line is also there on a lighter note. But more than the food delivery platform, I would be interested to look at the numbers from the Blinkit platform, which is the household provisioning, etc., etc., etc. Because over there you get charged the handling fee also and platform fee also, and sometimes even delivery fee. So put all together, I think the contribution from Blinkit is going to be much better and supportive to the balance sheet over the next couple of quarters. And I wouldn't be surprised if Swiggy would be on a fast track to come out with an IPO looking at Zomato's performance.